I spent over 100 hours deep diving into 100 microcap stocks in India, sifting through financials, management calls, and industry reports, and what I found was fascinating. Out of 100 companies, only 6 truly stood out, each representing a powerful theme shaping India's future. Let's dive in. First up, we have a company in the defense and aerospace ancillaries space. With India's push for Atmanirbhar Bharat in defense, domestic manufacturing is paramount. This microcap, High Energy Batteries Limited, specializes in niche batteries for military applications. See, the batteries used in missiles, torpedoes, or fighter jets are different from those used in our cars. Defense applications need energy-dense batteries that offer extreme reliability. These are usually silver-zinc batteries, and they make up 96% of high-energy batteries portfolio. The company has a proven track record, long-term contracts with major PSUs like BEL, HAL, and it benefits from significant import substitution. This isn't just about making parts, it's about a national strategic imperative. The company's current order book of 63 crores is also likely to be more than doubled to 163 crores over the next 6 months, with orders from the DRDO. At the current market cap of 500 crores and operating margin of 20%, the stock would be trading at extremely cheap valuations. It is given a death crossover though, so technically its structure looks weak. I would buy on falls or wait for a golden crossover before investing. My second pick is riding the massive wave of digital India and data center build-out. With 5G rollout, AI adoption, and data localization norms, India's data consumption is exploding. Orient Technologies provides specialized IT infrastructure and data center solutions. They are crucial for the backbone of this digital revolution, servicing the very infrastructure that powers our apps and AI. Demand here is non-negotiable and growing exponentially. Apart from data center solutions, Orient also recently ventured into device as a service. Under this model, the company offers desktops, laptops, tablets, printers, scanners, smartphones, and servers bundled with software and managed services. These offerings are provided on a subscription basis, allowing consumers to pay on a pay-per-use model. This significantly lowers early costs for startups and small companies. In India's entrepreneur-focused economy, the novel system could find a strong footing. There are a couple of red flags though. Institutional investors, both domestic and foreign, have reduced stake in the company. However, the promoters have increased their stake marginally post-recent listing. The company is only trading at 1.5 times sales, which is significantly cheaper than almost all of its competition. Next, we have capital goods and specialized engineering, particularly benefiting from the PM Gati Shakti Yojana. India's railways are undergoing a massive overhaul. Tirupati Forge Limited specializes in precision forgings for railway components or heavy machinery. They are a critical supplier to the railway and heavy engineering sectors, poised to benefit directly from the DFCs and modernization drives. Their products are fundamental to infrastructure. Nearly 70% of its revenue comes from oil and gas and mining, which as utilities are both sectors that usually suffer less in recessions. It might be a good hedge against a recession, especially at currently discounted prices. It has corrected to nearly half from the top, and promoters have started buying into the company. The company's recent capex is also expected to be operational by the first quarter of the next fiscal year. It is a risky play, but with a large margin of safety. The next company is tapping into India's green energy transition and biofuel mandates. With a target of E20 ethanol blending, distilleries with capacity expansion are gold mines. Dhampur Sugar Mills Limited is aggressively expanding its ethanol production capacity. The government's clear policy support provides immense demand visibility and a long runway for growth. This is a story of national energy security meeting environmental goals. This is a 100-year-old company and a stock that is highly cyclical. Currently available at nearly 75% corrected from the top, it seems safe for the long term. If you'd bought into Dhampur Sugar at any point after an 80% correction, we would have gotten a 5x return over the next 5 to 7 years. Add to that the fundamental triggers for its ethanol production and power generation, and this becomes a bit of a no-brainer for long-term investors. For my fifth pick, we have a player in specialty chemicals. As the world adopts a China Plus One strategy, Indian chemical companies with strong R&D and niche products are shining. Chemcon Specialty Chemicals produces niche inorganic chemicals used in various industries. Their expertise in complex chemical processes gives them pricing power and high barriers to entry, making them crucial cogs in global supply chains. They have a near monopoly in two very important chemicals, HMDS and CMIC. They supply to the likes of Aurobindo Pharma and Laurus Labs, and their expansion is expected to be completed over the next quarter. This stock seems to have suffered from the de-rating of chemical stocks in India. Whenever the cycle finally turns, Chemcon should find itself as a favorite stock for microcap investors. And finally, an unsung hero in logistics and supply chain integration, with Gati Shakti aiming to cut logistics costs drastically, efficient movement of goods is key. SJ Logistics offers integrated freight forwarding and supply chain solution. As new corridors and ports become operational, companies like this will ride the wave of efficiency gains, directly benefiting from increased trade volume and faster transit time. The company is present across all continents and handles yarn and textile commodities, automobiles, heavy engineering goods, power transmission, rubber tapes, pharmaceutical, carpet handicraft items, iron and steel, etc. The recent trade war has naturally weighed on the stock's price, but its promoters have started buying again, which is always a good sign. It is a recently listed stock, but is still trading at a single-digit PE, one to buy for the long term.